Welcome to this video about responsible credit usage brought to you by Oregon State Credit Union. I'm Audrey. I'm going to be walking you through the top things that you need to know about using credit responsibly. All right, so when I talk to the community about using credit cards, I often ask them if they think using a credit card is a tool or a trap. So let's go ahead and talk about how a credit card might be used as a tool and how to avoid it turning into a trap for you. So, when we're thinking about credit as a tool, we know that having good credit history is going to lead to that higher credit score. And high credit scores can give you a ton of benefits. One of them is that you can qualify for more things, qualify for loans in the future, like maybe an auto loan or a home mortgage, or even qualify for things like housing and renting. Higher credit scores are also going to save you money. They're going to save you money on interest rates of those future loans that I just talked about, but they're also going to do things like save you money on things like your car insurance. All right, we all have heard that credit cards can be a trap. So let's look at how you can avoid turning a credit card into a trap. Here are some behaviors that we see when credit is turning into a trap for someone. One, they're not repaying their full balance of their credit card every single month. So they're not bringing that balance down to zero. Instead, they might be doing something like only making the minimum payment, which is a huge way to see that credit card debt creep up and up over time. They're also maybe using credit cards without tracking or looking at their budget, so spending more than they have available in that month on the credit card. And finally, using a credit card because that person doesn't have savings for an emergency. This is a big way that credit can turn into a trap. So it's really important that you're not saying, I don't need an emergency fund because I've got a credit card as a backup. All right, so the power of credit as a tool, we're talking about that credit score. And usually we're talking about the FICO score. These are the 5 factors that have an impact on your FICO score. And these are going to determine those simple behavioral choices that you make with your credit card that are going to boost your score and keep it strong over time. The most important factor is payment history, making your payment on time. The second most important factor is how much of your credit card balance you spend, keeping that spending low, not maxing out your card. The third is length of credit history, using credit and having long lines of credit, for example, 3 years, 5 years, 10 years. The older the credit, the better this category in the score. Then we look at factors like new credit. When you apply for a new loan or a new credit card, you might have heard that someone pulls your credit. This is going to negatively impact your credit a little bit, so only about 10% of your score, not a huge factor. And then we're looking at something like credit mix. So your credit score is going to increase a little bit if you have a credit card and an auto loan, or a credit card and a mortgage. If you only have a credit card, your mix is going to be limited. All right, there are really, really simple tips that you can have in your back pocket ready to go so that you know you're using credit responsibly. Let's check these out. So all of these factors are connected to making sure credit is not a trap for you and making sure that you are using those FICO score categories to your advantage. The first one is have an emergency fund, right? Make sure that your credit card is not your emergency fund. It's a good rule of thumb to look at your paycheck or your income each month and use about 20% of that for different savings goals. And one of those savings goals can be an emergency fund. Number 2, do not spend more than 30% of your limit on your credit card. So if you have a $500 limit on your credit card, don't spend more than $150. Once you spend that $150, it should already be factored into your budget, so pay it down to 0. Number 3, only spend what you can repay that month. Remember, check out your budget. Make sure that what you're using the credit card for is as a tool, not as a way to sort of spend money that you don't have available. And number 4, never make a late payment. Payment history is the number 1 factor in your FICO score. Pay on time every single month. And this is why I tell everyone that they should set up auto pay with their credit card. Even if you want to pay it off manually yourself every month, set up auto pay just in case. If you still are a little bit worried that getting a credit card is going to be some dangerous territory for you, I have a very simple 2-step little plan here that you can use credit for, and you can make sure that it's not a trap. So here's the first thing that you do with your credit card. Number one, set up 1 or 2 reoccurring subscriptions to be paid by your credit card. It could be your Netflix, it could be Hulu, Spotify, whatever. Make sure that you watch your credit limit. You don't want to be spending more than 30% of what's available on your card. So you set up these reoccurring bills to be paid on your credit card. Step 2, set it up to be paid automatically every single month from your checking account. You can choose when you set up auto payment to choose the full balance or the minimum payment. In this case, you want to choose the full balance because it's already part of your budget, it's already something you pay for, and you want it to get paid down to 0. That way you won't be paying interest. That's it. All right, well, congratulations on this step in your financial journey to get a credit card. We want to let you know that we're here for you every step of the way. And on our website, you can find a lot more financial wellness education.